With rates rumored to come down, inventory's already dropping. Let's talk about it on Today in Mortgages. Hey, what's up, dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. And we've just come off of Labor Day weekend, so we've got a lot to talk about. Rich, how you doing?
Hey, I'm great, Michael.
Good. Well, hey, Rich, one of the things that you've been talking about on this podcast a lot of things that we've been seeing in the news is that this idea is that when rates come down, it's not necessarily going to make housing more affordable because on the other side of that, what do we have a problem with, Rich?
Yeah, we don't have the supply. So we still have demand here, supply here, or actually way down here. So uh, this just goes to show generally, August is a month where new applications start to tail off. And here we saw a big August for us as a company. We saw a lot of purchase applications, and that all is just because of the talk about lower interest rates right now. So what we need are now sellers, especially existing home sellers. We need them to put their properties on the market. So we're just in this stage right now.
And to highlight that, Rich, we have an article from Housing Wire today. The title of that article is Housing Inventory Falls as Mortgage Rates Drop. And again, this is kind of the inverse relationship that you've been talking about. When those rates come down, more people will come into the market, we'll get more applications, and that necessarily means that houses are going to move off the market and the inventory is going to drop. So just want to take a look at these numbers with you, Rich, because we're kind of comparing this data to where things have been. And so month over month, this is our first drop that we've seen in quite some time. So there's some statistics in here, and I want to highlight that drop month over month is like in the matter of hundreds of homes, not
It's like
thousands.
300 homes. Yeah.
Right. And so I just wanted to ask you the question, like, how important is this and what does it actually mean? And if it's important, why?
Yeah, it's really not important. I mean, this is a seasonal business. And then you've got this kind of crazy dynamic where we're starting to see interest rates come down at the end of the buying season. So, which is, again, with a housing shortage. And I don't mean just single family residents, I'm talking about apartments and everything, multi units, all of that stuff. There's a housing shortage. So, if we don't see more listings, it's just going to get home prices are going to continue to climb because the demand is still so high. So hopefully, this little dip in data, 300 less homes, that's because some of these properties, honestly, they're not even hitting the market. Like some of them, they hit the market just because they have to for a day and it's out. They're sold before it's even listed. So it is just a very competitive market out there right now.
And that is, again, just down slightly, a couple hundred homes from the previous month. But in past years, just as a frame of reference, we're going to put a chart up. But back in 2015, we had 1.2 million around this time of year. 2019, around 1 million. But our number of this year is actually 30% higher than it was in 2023.
Right.
So inventory has been trending in the right direction, which we've been talking about here on the show, Rich. But it's still way too low, right?
Yeah. Yeah. We need to be really, we need to see 1.5 million listings. That would be closer to healthy. We haven't been healthy in a long, long time. So since after the Great Recession, but we're climbing back. Listen, lower interest rates are going to help. They're going to entice existing home owners that need to move up or move out or move down, some of the older homeowners, but rates have to come down for them to make it more affordable because keep in mind, a lot of them are sitting on 3% interest rates right now on their existing home. If they're going to sell it, they're going to want something closer to that. It's never going to hit that, or it's not going to hit that in my career again. But if it got into the fives, now it's more appetizing, and that's where we're trying to get. Now, Fed, maybe we see a jobs report this Friday, which is coming out. Everybody's eagerly awaiting that one. And then you got a Fed meeting on the 18th of September, and the Feds are going to make their announcement. They're likely to cut 25 basis points, maybe 50 basis points, but then they're going to give us a roadmap on the cuts upcoming. And if that happens, the market senses that, and starts to price in the improvements earlier. So we'll start to see, even in a slow buying season, October, November, December, if rates start to come down, that buying season is going to be extended. So, which is great for us in the mortgage business. And it's great for home buyers that are out searching for homes. There will be more listings when rates come down, and at least an opportunity for buyers to go out and make competitive bids, even though prices are going to be rising. The good news, Michael, this article did refer to price cuts. So price cuts keep elevating, right? Well, we're at closer to 39%. And that's good news. That's sellers cutting to open up more opportunity for more buyers. So that's really good. What we don't need more home appreciation. Obviously, homeowners, as a homeowner myself, I love the appreciation. But if I need to go and sell my property, I'm limited to who can buy it. So it's just paper wealth right now. And we need prices to stabilize and kind of sit there for a while to give people a chance to catch up and buy some homes.
Yeah, several things there, Rich. I think one thing I want to come back to is that when these rates drop, more existing homes will come on the market. And that's interesting because it gives people an opportunity to maybe get into an area that they want to be in town, but it's more of us just kind of shuffling homes around. And what we really lack is those new home builds that kind of bring more people into the market and allow that number. You said like 1.5 would be a really healthy number, which just doesn't seem like a possibility unless you're talking about a lot of new home builds. Is that right?
Right. And we are. I mean, builders are aggressive. We've said many times on this show, like, builders are aggressive. They know, like, even though it's volatile, it's still a very positive 10, 12 years ahead for them. They just have to, where are they going to build? What size homes are they going to build? What's going to move quicker? Uh, you know, it's challenging for builders because the cost to build is also elevated, right? Interest rates not just hit homeowners and home buyers, they hit builders, they hit everyone that has to finance something. And that's what's lifting the cost of the new builds too. So, listen, positive things are happening. I don't want to lose focus on that because we are seeing more inventory. We're seeing rates coming down. We're seeing the demand come back into play. We just need more inventory and slightly lower interest rates. I mean, come on.
Well, Rich, if there's anything I've learned in my kind of short stint in the mortgage industry relative to yours and also the time doing this show is that the only thing that moves fast is rate hikes and everything else moves very slowly. But it seems like it is, moving at the speed of a glacier in the right direction. And that is good news. And so, like you said, in the fall, in the spring, we're going to see some of those things come online. The dominoes start to fall, and we're very excited about that. Hey, the other thing we're excited about is just all the cool things happening inside the network here. And if you're interested in learning more about that, click the Grow link below to get information on how to be a part of the best network in mortgages, and we'll get you everything you need to know. Rich, as we close this out, anything else on this article that you want to highlight?
No, nothing specific. Overall, this is a good highlight. The author of this has been tracking this stuff and really following it and actually predicting a lot of the things that are happening right now. So this is a really good piece. It's a positive piece. It's just telling you data and how it fits in the market today. So I'm happy for it. And I look forward to more improvements.
Excellent. Well, we will link this article below if you want to check it out for yourself. Rich, thanks so much for highlighting some of these things for us, for making us smart today. Thank you, everyone out there, for watching, listening, and we will see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.